Welcome back to another video, guys. In this video we are going to be discussing volume and momentum. Before we get into the video, guys, if you want to help us get to our goal of 3K, make sure you hit that sub button, hit that like button. If you want to be notified when we upload fresh videos, hit that notification bell. And of course, drop us a comment down below to let us know if we've helped you. If you are looking to join our Discord community, link is down below. I hope you all enjoy the video. So as stated in the intro, in this video we're going to be covering volume and momentum. We're going to be covering what these individual things are, how they tie in together, and how we can start to use them with our trade ideas overall. So first of all, we're going to start off with volume. Now, volume is essentially a very key tool when it comes to trading as a whole. As what does volume display to us? So volume displays to us a couple of different things. It will show you where there are high levels of orders in the market. So you either have many individual large traders in there. When I say large traders, I mean institute, small hedge funds, all that kind of stuff in a given area, for example. So why do we want to be aware of this and how can we see it? So the way that we can identify where volume is and how we can sort of refine down to the exact point where a volume came into the market, we have a couple of different options. We have our visual references. So with our visual references, you can see that at any point where the market decides to aggressively take off in a given direction, you can pretty much say to yourself that there will be an order block in here that is responsible for this volume coming into the market. Now that is just simply how we'd visually notice it. All right. Normally at areas of high volume, you will see imbalance and inefficiencies or fair value gaps, whatever you want to call them, to again confirm that you have those big orders coming into the market. So in this case, when we come down to the smaller time frames here, 5 minutes perfectly adequate, but we can see on this 1 minute that we have a short shift up before we have a clear impulsive move down. So we know that inside of this general area there is high volumes inside of the market. Now, if you are not that confident at looking at candlesticks and generally reading candlesticks, you can apply this simple tool here, which is the volume tool. Now, this volume tool is pretty simple, and I believe that it is set on your charts by default when you first download MetaTrader and when you first download TradingView. So this tool is very easy to find, and if you don't have it set on your chart, simply go to your indicators, type in volume, and you will find it around here. Right, this is your volume tool right here. So when you click on it, it will apply this to your chart. Now you can change the colors of all this stuff if you want to. Personally, I don't use the volume indicator itself. I just visually look at what price is showing me. If you want to, like I say, you can use this. It's a very easy way of being able to identify it. But straight away, if we look at what the volume indicator is showing us, you can see that the average level for the volume itself is around this kind of point. It's around that kind of level, right? This is where most of the highs sort of stop, most of the wicks change direction. When I say wicks, there is no wicks in here, but most of the areas change direction. So it's very easy to highlight areas that hold more volume than others, right? And using that, you then refer back to the point where this price action occurs in line with the volume. So you can very clearly see, if we pull this down, that candle right there that we spoke about, the last candle before the down move, is where the volume comes in, and we have some serious sell moves here. So why do we want to know this, and why is this important? So the reason why this is important is because if you're using smart money concepts or any concepts that are designed to travel in the direction of institutes, then you want to be where the highest levels of volume are, because it gives your area much higher probability to react. So what we need to obviously remember is the system that we're using, so smart money concepts as a whole, is based around the principle of trade with the banks, right? So where do we know that banks are getting in? Where high levels of volume lie. Now this is a proven fact because the only people that have enough equity at hand and enough money to throw into the market are our institutes. So whether they be central banks or multiple hedge funds or wherever it is they are, if it's one person with a unlimited bank account, whatever it may be, we know where they are because the volumes spike up drastically. Now you will see volume spikes during news, and that is something that you're going to need to have a bit of discretion with. But overall, if you have a clear direction in price with a clear area that volume is high in, whether you use your visual reference, whether you use your indicator, whatever it is you use, if you're looking to trade away from that area, having volume as a confluence is going to drastically increase the probability of your area holding. Now this does not mean every single high volume area like so and like so is going to deliver you a trade. So what you'd need to do is line up with whatever structural understanding you use to find your trades, line that up with your volume, right? So volume as a whole is an indication of large amounts of orders being displaced into the market, and this is where we want to take trades from. Whether it be a short-term area, whether it be a longer-term area, wherever it may be, having that volume at that zone means there is a much higher probability of this area giving you the same displacement it gave prior. Now again, this is going to be dependent on whether you're looking at a trend move, counter trend move, all that kind of different stuff. We're not going to go into that in this session, but mainly focusing on what is price doing at this point. If it has dropped lower and we are in a downtrend, we will look for price to come back to this area to fulfill those large amounts of orders that they have left in these zones to then displace price lower again. Now, as we've spoke about previously, just because an area has high volume does not mean that price is just going to go straight back to it and then come away. Doesn't work like that all the time. But again, having this confluence is massive when it comes to entering some of the larger time frame and smaller time frame moves. So volume is a pretty easy concept to grasp overall, but there's another aspect that we can add in to the understanding of volume, which is momentum. Now, momentum is a pretty similar concept in the sense that it shows the same thing. Now, what I really want you to look at is there is a clear area of volume here, and we know this because we've just shown you in the examples. But look at the way price displaces low very aggressively, barely pulls back, displaces low again, takes out the highs, and then continues to displace low. So this is what we would look at as momentum. Now, how do we define this? We define it as momentum because price is clearly carrying downside movements a lot quicker and a lot more efficiently than it's delivering buy side moves. So what we want to be looking for are clear big candles leaving imbalance or inefficiencies. We want to see the lows being ran in this case if we're looking to go sell. We want to see lows being ran with clear movements below, so we call them displacements or impulses or whatever it is that you want to call them, as long as you understand the relevance of them. And we want to see them continually taking out those low moves. So when you line that narrative up with the understanding of volume and then add everything else in on top, so momentum with volume, with a liquidity grab, with a sweep and break of structure, with a short-term area to create liquidity, with a slow methodical move back to one POI or second POI, either or of those setups are valid because we understand the structural understanding of price, and we also know how we can begin to use volume areas with the momentum and direction of price as a whole to refine our areas down to much more probable zones inside of the market. So with momentum as a whole, What is it showing us? It's showing us that the sellers are continually taking over the market, and it's showing us that the order flow is consistently moving in one direction with speed. Now, what we need to really think about is if the big institutes or big banks are involved at any given area, they will show their hand initially with volume, but the volume will not remain. So when we highlight this, you notice how you have the large spike here from the sell. It's not the largest spike in the world, but a large area here where the volume has come in, and then it will drop off, and you see here the way the volume drops off. But what is not dropping off? The direction and speed that price is traveling in. It's only once you have another significant move where you'll see the volume starting to rise again. Now, this was a news event that happened today at 3 p.m. and the other points here are where bullish moves started coming in. So having just spikes in volume, like I said prior, is not going to be, I see a volume spike, I need to sell or buy here. It needs to tie in directly with your analysis as a whole. So when it comes to momentum, we can see it through the way that price is taking previous lows or highs and continually doing the same thing, displacing lower, pulling back, displacing lower. Sell side momentum in this move is very clear. So we've identified that there is momentum, we've identified that there is volume in two separate areas. So it allows us to then define this downwards move with our criteria that we have and refine two separate areas in this case. Sometimes it's one, sometimes it's two, that we can look for much higher probability setups to occur from. Now this is, like I say, a confluence on top of your overall setups that you have in place. Now, another thing that we're going to quickly touch on inside of here is the ranges. Now, the ranges for the sessions are going to be a very key element to add into this. So, for example, we have our Asia here, Asia session where we take out the high. Look where the volumes come in. They come in where price reverses from, telling us that the orders have switched from this bullish narrative into a bearish narrative. We see momentum carrying across. We also see that we have swept both sides of this now. So pulling back to an area above during the London session, when there's a gap inside of the London session, we understand that very early on in the London session, they converted their orders across to sells. So what's the most probable result if we come back into this session area here? It's a continuation of that sell side. Now, the reason why I wanted to touch on the sessions themselves are because you will see a lot of the time high volumes coming in after we sweep Asia. So notice how we sweep Asia right here. So let me get rid of this for you. We sweep Asia right here. Look where the highest volume comes in that day until we come back to that area. Right there, which is that singular order block, is the last move. So if we highlight that move, price taps in once, gives another inefficient area, momentum comes in, we then come back to that point, we react perfectly, and we continue to displace lower. Now in this case, you may have taken a break even if you held this trade looking to take out this low. If you left your stop loss above the previous high, you'd still be protected and you would have hit TP. But overall, the same thing is going to happen. Now, I personally would not, just for my trading plan, I personally would not be paying too much attention to unmitigated areas inside of the Asian session, because this is normally a session that is served as liquidity for the higher volume London and New York sessions. And we come across and we look at what happens again here. We sweep the Asia low. We have the highest volume candle of the day created at the reversal after this Asian low is taken. We are now coming back down towards this and we see a slight push away. In this case, we break past this level, which is fine because we were looking for that to happen. Again, we're not going to get too much into that, but you're going to see the same thing happening. So if you see a clear volume and momentum gap inside of your London, New York session,
there's a high probability that if you revisit that area, the momentum you carried out of that session or out of that gap will provide you with another adequate setup that you will be able to capture profits on and continue trading that trend. So guys, super quick and short video for you there on volume and momentum. If you have enjoyed the video, make sure you drop us a like down below and drop us a comment. Of course, if you want to join the Discord, the link is down below. I look forward to catching all of you very, very soon in our live streams. Peace out.